Okay, here we go. So let's move that up there. Bring this here. There's my live chat. I'll do this. Okay. Excellent connection. Oh, testing. So, because this is recorded, no one's really joined me. I've started the stream a couple of minutes earlier. So for anyone who is joining or watching this as a recorded event, welcome. I am going to work through the markets live on Friday morning and have a look at what's going on. So this is a relatively informal market scan at this time. Okay, so let's just have a look at a few things here quickly, which is the calendar. Let's go see what we've got going on today. So a couple of things first of all, while we sort of get going. The London session hasn't really kicked off yet, so it'll kick off in about half an hour. But that doesn't mean that there isn't a little bit of activity happening, and so we'll do that. Sound should be good. I'll need people to confirm. If there's any issues with sound, please just type it in, but it should be fine. It says it's connected. I'm using OBS, which is Broadcasting Studio, so it should all be good. Yeti says it's fine. Yep, should be good. All right. So let's have a look at that. Let's go to the calendar. All right, and so what we're looking at today. Tell me it's Friday. It's Friday, right? Okay. Usually when I'm so in anticipation of getting up in the day, typically you wake up in the middle of the night, or you wake up early morning to go to the bathroom. Excuse me. So these days, if it's 4:30 or 5:30, I end up waking up and then I'm like, well, I'm going to get up soon anyway. So, but to be honest, I would rather just wake up when my alarm goes off rather than wake up out of excitement. Okay, so for today, this is pretty standard for the first Friday of most months. We've usually got some CAD employment numbers, but mainly non-farm employment change coming out. And this, the numbers are really irrelevant for the most part. There would have to be something really off to have the market have a really bad reaction to it. So the numbers would have to be substantially better. So let's just say here that the forecast of 553K, the previous ones were 531, and this came out at 650. And it's so much better than they expected, or so much worse than they expected, or something ridiculous, but by a vast number. So where there's a complete disconnect between the expectation and that, then there would be a reaction to it. But we're not trading that. We want to just stay away from the markets when it does that, because there's going to be a lot of noise and disruption. Generally speaking, the U.S. economy overall is looking really, really well, and the Build Back Better plan is a phenomenal plan. I mean, imagine if I live in the UK and the roads here are just shockingly bad, and there's always construction going all the time. No matter where you drive, there's always going to be a part where you can't, and it's an old city. It's 2,000 years old, so that kind of makes sense. But imagine a huge influx of cash to bring a country up to maybe even up to the 20, sort of trying to bring it 50 years into the future, and trying to build it up, but also the jobs and everything. So the US economy, I think, is going to do really well for the foreseeable future. There's no reason why not. And actually, beautifully, finally, a lot of that money is actually going to the sort of middle and lower income brackets, as opposed to straight to kind of the wealthiest of Americans. So that being said, I'm not really expecting, generally going forwards, not really expecting any employment issues. The US is recovering incredibly well. The lowest job claims in something like 60 years. So the US economy is just fine. The fears of inflation, ultimately, because there's people spending money, there's a bit of inflation happening. It's not rampant at this time, but it probably will either just be sustained. Anyway, so all of that's really irrelevant for the purposes of today, having a look at the markets. Okay, so for the purposes of today, not really a concern. The most important thing is just being aware that at that point today, there's likely to be disruption in the market from the US side, possibly on the CAD pairs, and that will impact some of the crosses. So what I'm going to do here is work my way through each of the pairs, have a look and see if there's anything that might be setting up for the next 2-3 hours. And if not, then fine. Then it can roll over to Monday. And if this works well, and if you like this and there's some good feedback on it, then I'll try to do it on a more regular basis. So let's have a look. And so what's on my charts? I'm using MT4. I have different platforms, but I thought that I would just go ahead and use a live account on MT4. I've added in a clock, a little countdown clock, so that's always there just to show me how long I have before the candle closes. And I've added in a nice little sessions indicator. This one here, Forex Market Hours, GMT version 2.3 is a little sessions indicator that I can color. It's quite cool to see that on the chart. And I've used actually this, I've pinched off IG. I have various accounts in different places, but I've pinched the clock is off IG, is it? Candle countdown. But you get various ones that you can even build your own ones. Okay, and then I've got my pairs here. So let's have a look at it. Start off with Euro Dollar. And so what I've also decided to do, I've taken everything else off. Everything else off because I think that doing analysis this way is probably one of the best ways to do that. So, all right. So there was actually an uptrend. We had a long term, if we we only really need to look at the 4 hour for the purposes of today. We only need to do that because we're looking at 3 or 4 candles. That's our total kind of exposure in the markets today, maybe even just 2 candles. So we just need to get a sense of what's going on here. So all I want to do here is say that we've had, for quite a long period of time, we've had this trending down. Right, we had a patch here where it kind of tried to do that, ended up consolidating in this area, and subsequently continued to trend lower. Now it's trying to break up again, and in fact, actually there was a disruption when news came out of a change in tone from the Fed in the US saying maybe we should not refer to the inflation as transitory. But what annoys me about that is they said that a week before. So they said the exact same thing a week later and the market had a bit of a reaction to it. And it's because the market is concerned about inflation, looking to the Fed saying, aren't you concerned about this? If you're not concerned about it, then we don't need to be, but don't you think we need to be? And then the Fed effectively said, well, okay, all right, fine. Maybe we need to keep an eye on it, which I think they know what they're doing. But all it did was go, well, see, we told you we needed to stress about it, which is just ridiculous. So anyway, the market was looking to do a bit of a correction. There's always this ebb and flow. There's always going to be a point when the currency gets weak enough that it will potentially become attractive to investors, it just gets really good. So the point being is that once, even if euro is generally weak, there's a point where a weak euro becomes attractive for buyers, and therefore buyers step in and it gets a boost. And the dollar also needs to take a breather because strong dollar buyers have to at some point take a break. So the point where I'm going with this is that there's no reason why we couldn't have a shorter term correction to the upside where just for a couple of weeks we get, people taking profit and people who want to buy euros come in or sell the dollar kind of thing. But having said that, that's what it started to do. And it was looking really nice, happy and healthy. Then this comment came out and broke this trend. So this trend is done. But at the same time, this market reaction pushed back up, but has created this reaction. So all of this is tied to this single bit of distraction in the market. Basically, the market now trying to decide what is it going to do? Like, what do we do now? Do we go back to this longer term trend, or do we try to correct upwards, or do we go sideways? There's a possibility that today non-farm will kick that either way. It could kick it up. It could push down. If we look at the daily, overall, this looks bearish. Overall, we've had a bit of a correction, bit of indecision, and now we've got these 3 bearish inside candles. So it would be okay for it to continue down here. That would be a nice level of resistance, be able to continue down. Alternatively, what I would like to see it do then, if that isn't the case, is to see it break that. It's got to break and close above that. If it breaks and closes above that for the day, then we're much more likely to see the market head up to this level. That's what I'd like to see. So if we break above here, close above here, we're going to see it go up to there over next week. And that means next week, there'll be euro dollar buying opportunities for day traders. On the other hand, I also expect this level of support to hold. I'm going to just put that there. I expect that level to hold for now. So we could see today the market pushes down to that level. It's possible. That's really kind of where we're at for the most part. We are currently in a downtrend. I'm going to stay away from this from a trading perspective, but there. So that's my thing. All right, let's move on to the next few things here. So hopefully that makes sense. And we're looking at, I'm just going to update this quickly. Okay, so this on the other hand, so if we look at sterling, it looks quite bearish to me. Why? It's got a series of lower highs coming in here, and despite this little pushback here, it looks very keen on effectively sort of breaking through this kind of level where it is now. Having said that, if it stays where it is, and again, non-farm payroll, we get a weaker dollar, we could see it reject that level. But as it is now, it looks like a breakout short. Now, if there wasn't any scheduled news, I would absolutely be getting ready to look for shorting opportunities. Either a break of the low, so you'd go down to the 1 hour. I'd want to see a break of this down to the 15 minutes. A break of this level would be really key. So I'd look for a break below, retest, and a continuation on the 15-minute time frame. But right now, we're just waiting to see what happens with that. So I'm not saying I knew that we would have to wait to see what happens with that. I'm saying that we're going to have to do that, because where the chart is now on that particular level, it is looking like there's an anticipation of a stronger dollar in the run up to NFP, but there could be a correction on that. And it really could go either way. Looking at the charts, even how we know how the numbers are going to be. So let's say that strong job numbers come out, it meets expectations or it's better than expectations. The market can still sell off, because that could be the anticipation, and therefore there's a ramp up in dollar buying, and then when the number comes out, everyone takes their profit. So there's reasons why the market reacts. It's just pointless trading it at this time. Okay, so let's move on. Let's go look at Aussie dollar. Aussie dollar also, look at this key level. This often happens. We sit right at a level and it looks really weak. But it doesn't mean you couldn't have a rejection there. It's just so super tricky when it does this. But it does look bearish. So technically, currently, this looks as though the market wants to head lower, which means it's expecting a stronger dollar today. Almost as though it's not giving us a clue about the news, but it's expecting that. But that doesn't mean that's going to happen, so we can't assume that. Okay. If you have any questions or you want me to look at something, just put it in the chat box, okay? Kiwi dollar, same thing again. So there's no surprise here. We could see they all look pretty much the same. They're all sitting on a cliff edge or close to an edge, and we want to see how the market reacts to that. All right, so let's move on to dollar yen. Dollar yen here is also looking quite bullish. So there is, you can argue there's a strong level of support. Actually, it's going about there. Strong levels of support at this point here. And it looks like it wants to head higher. Okay, again, supporting a stronger dollar for this morning at the very least. Dollar Swissy also looks like that wants to now break out of this level to the upside. So if we didn't have this news coming out today, which could endanger all the trades, I'd be looking for moves to the upside. But this behavior, where you see all of the major pairs right on an edge, implies you don't just get that randomly. That doesn't happen in the normal course of a trading day. It happens when there's a news event on the horizon. It's just way too much of a coincidence that every single thing is sitting at an edge Friday morning for no reason at all. It doesn't. So there is a reason. That's what it's waiting for. And it's not because it really cares. It's just because everybody is now, well, I don't want to be in the market until the news is done. So they just stop trading. So it's cause and effect. So the market just slows down until the news is gone. Not really in anticipation of the news as much as it is just that waiting for that news to get out the way. I think that's a better way of putting it. Again, here's dollar CAD. So the other thing that I would say is different. Dollar CAD versus dollar Swiss and dollar yen. Is dollar CAD is generally trending higher. Okay, so I'm just going to draw a line here. Let's put it like this. I'm not trying to connect it. I'm just trying to show you that as long as price operates above that, generally this is quite strong and bullish. Again, if we had a reaction today where we had a correction against us, and it closed down below here, then next week, to me, that sets up for a weaker US dollar. So there'll be trades next week, which is great if it does that. So basically, just having a look at all of those are leaning towards a dollar. No immediate trades because they're sitting at a cliff edge. What else is going on? Ooh, excuse me. Sorry about that. You're just going to have to live with that because it's an early morning session. And yeah, this is a Rick and Morty t-shirt as well. All right, so we're stuck in a range on Euro GBP. So let's frame this out and talk about this particular thing. I'm just going to stick it there. And let's put it up here. So let's go there. Yep. I'm happy with that for now. And let's go have a look at this because there could be some short-term buying opportunities today. So we can see we're range bound. We're range bound for now. Mixed highs, lows. So we might be able to find a trade to the upside here. So let's go down to the 1 hour. So the 1 hour is now in an uptrend. High lows, high highs. Okay, so the goal, the rules are, let's do this. So first rule, trade with a trend. Okay, trade with a trend. I want to make sure that we do that. Also, obviously, we want to make sure we identify major levels. That's really key for us. Major levels on 4 hour because we've only got 2 or 3 candles that we need to be concerned with. So we've done that on the 4 hour. You can see the top and the bottom of the range here. We've got a high, low, high, high. A little bit of a level here as well. I can see that. So I guess what I would prefer to see is if once we break past that level, so go down to the 15 minutes. And so this is what I would like to do. I've also got a couple of other really cool tools over here. I've got the arrow one, plot arrow. So what does this do? Plot arrow allows me to draw arrows on my screen. So now I can say, okay, well, this is what I'm looking for. Allows me to do that on MT4. It's a nice little script. Potentially. So that's a possible trade setup effectively occurring now. So the way in which I would like to see that happen is to see again a breakout candle, nice little breakout candle there, potentially another candle that retests it, rejects it, and then that could be my setup. So my entry would be above the high, stop loss back in the range or midway through the range, and then look to trade it as high up to the top as possible and capture some profits on the way. Always, so as a fixed rule, capturing some profits at 1-to-1 or 2-to-1 or 1-to-2, whichever way you want to put it, but when I'm up 1 or 2%. Okay. So, right, cool. So that's a possibility there for Euro GBP. So I'm going to leave that chart up because that's a possibility. Next up. Euro Aussie. So I'm liking this. It's climbing up. There's definitely a bit of a level here that's a danger. Let's go to the 1 hour and let's put some concern. Let's wrap that up a little bit. So there's a level and let's map out the bottom, but we are high lows, high highs. So for the most part, uptrend, well, for the most part, we are trending higher. Again, quite happy with that, but this is a danger. So I am reluctant to get in until we get past this. I would again prefer to see price break and close, probably on the 1 hour, just break and close higher. I want to see a candle that closes up here. So, okay, so I'm not going to go anywhere with that just yet, but that is the idea. So Euro Aussie absolutely on my list. So far, potential charts. The goal would be all trades would be taken on the 15 minutes, okay? But they're not ready just yet. First one is, what did I say it was? Euro GBP buy. Second one is Euro Aussie buy. Cool. Euro Kiwi is going to be a similar situation. Overall, it's bullish, but this is a problem. So I want to see it broken through that. And again, so what could happen here, genuinely, is that the markets could start moving after NFP. So 2:30 to 3 p.m. UK time, they could really start kicking off. So that means that I would, there could be some trades in the afternoon. But I would only enter on the 15 minutes or like even lower, possibly the 5 minutes, maybe even the 1 minutes for more experienced traders, because I want those trades done by close of day. Alternatively, just don't trade today and wait for next week. Okay, so it's the same thing with Euro Kiwi, Euro Aussie. Okay, here we go. So we've got Euro Yen. Euro Yen, excuse me, is struggling with this level. It is bearish, but it also looks to me like it's getting ready to change direction. Overall, the yen pairs are starting to put on the brakes. They're starting to look like they're kind of tired of heading lower. And so there's probably some bullish divergence. We can have a look at that. So let's bring in MACD. I'm going to fix it the way that I like it. I don't use the histogram. You don't need it. You just don't need the histogram. And we'll make this blue and we'll make it nice and thick. Boom. Okay. So is it bullish? Yes, it's bullish. How do I know this? Because it's starting to trend higher. Not much, but a little. Okay, so we got that. That it looks overall, I think it's starting to creep higher. Okay, never mind. Let's leave that. Next up, Euro Swissy. Euro Swissy, and again, I don't want this distracting us the whole time. Also looks like it's found a bit of a level. Again, it can break through, but it also can reject it. So here I'm taking the euro as the main kind of thing here. If the euro is going to strengthen against the US dollar, then it makes sense that euro... Excuse me. Sorry. The Euro Aussie, Euro Kiwi pairs are looking bullish. Euro GBP is looking bullish. If Euro Yen and Euro Swissy and Euro CAD start to trend higher, then we can probably anticipate it's fair to reach a conclusion or to take away from that the euro is strengthening. So again, I'm going to have a look at that and see if we get a boost on the euro today. We can get a boost if the dollar weakens. We can get that happening, or just for whatever reason. Euro CAD definitely got a level here. I don't like this. This is very choppy, very messy. Not a fan of it at this point in time, so it's a pass. It's a pass. Not because it isn't kind of looks like it's higher. It's also just a mess just within the last few candles. So it's got this level of resistance here, which doesn't look good. It hasn't really followed through on much higher lows. It's gone from trending slightly higher with a major resistance to becoming a hot mess of bundled kind of things over there. Not great. Pound Aussie. Pound Aussie, absolutely. Look at this. Absolutely, this is going on the list. Okay, Pound Aussie, GBP, AUD, that's a buy. All of these are 15-minute time frames. Might be waiting for confirmation of moves. But this one so far, bit of a stall where it is now, but so far looking better. Look at the 1 hour. Not bad. Check this out. It's a bit of a level there. Okay, bit of a level there. And then 15 minutes. And there's obviously a bit of a level here. So this is what I would like to see here, is go down to the 15 minutes and start to see it start to break higher, a little bit of a high, low, high, high takeoff there. And if that works, if it does it from here, which I don't think it might break lower here, but in fact here it might actually want to come back down to the bottom of the range. But if it did break out and close, my stop loss could be under here with my entry wherever it is, whether it's a break or a retest, but then my stop loss below that makes sense because it's a nice, if this holds and price breaks up from here, that becomes a really nice closer, and the distance from wherever that would be somewhere in the region of 16 pips, which is not so bad. Cool. Let's go back to this. So pound Aussie for sure. Pound Kiwi is also going to be looking bullish, but this is a mess. So pound Kiwi, not as much of a fan of. Pound yen. Pound yen also definitely looks like this is putting on the brakes. Why do I say that? We had a level here. We had this level here, which I actually want to bring this down a bit. Let's do it like that. We had this level here. Price kind of consolidated in this area, broke through, broke down to here, came back up, consolidated, broke down again, came almost all the way back up into this price area, then went down again, just broke this low, then came all the way back up and consolidating. So what you're seeing is you're going from a phase where there's lots of sellers here, then not as many here, then they come back in again, but almost immediately in this whole area, you've got them exiting and stepping out. And so you've definitely got bullish divergence. And now you've got a strong bullish candle here, which you haven't had. I mean, there was a small one, small inside bullish candle, which pushed up. Now you've got an outside engulfing bullish candle. So it's progressively more and more buyers coming in or pushing back a lot harder. And so this is now a major kind of support resistance level. A break above that would signify, and especially a break above that would signify potential moves to the upside. Not ready yet, but could be interesting. So pound yen looking like it could be bullish next week, but not for today. Pound Swissy looking quite bearish, although there's some strong rejections here. It's in a range, and it still looks actually quite weak. Still looks quite weak. So in this case, I would stay away from it because it's ping-ponging a bit too much. Pound CAD. Mess. Complete mess. Bird's nest. Resistance up here. Bottom over here. It's a bird's nest over here. This whole price range. Absolute nightmare. If you just kind of just bracket largely what's going on in there. It's just crazy. So pound CAD, absolutely not for me. Aussie Kiwi, not looking great. Big moves down, moves up, moves down, moves up, down, up, down. It's just not clear. Aussie Yen. Morning, morning, morning. Good morning. Okay, Aussie Yen. Also slowing down. Look at that. Big drop down and now just starting to bob around. So I think the way it works is, excuse me, it starts to slow down. And because the market's made up of layers of participants, of which traders are just the sprinkles on top. We just generally will piggyback on top of whatever else is going on in the markets. So in a situation like this, the outcome in the future, we don't know which one, nothing's guaranteed. We could see that it's slowing down, but the best way to interpret that is the market, I can take this off now, I don't need this. Is the market tired and doesn't want to change direction? And then usually there's a buildup of evidence that says that's going to be the case. But in a situation like this, what can actually happen is one of two things. It slows down because it's reaching a point where it's like, I could go up or down. If for whatever reason there was a big single candle that pushed down like this or something big like that, what would happen then is then the traders would go, oh, okay, well, we're not done yet, and then we'll go back to selling. And then sort of, in other words, it would hesitate and then just resume selling because there would be a big push in that direction. But more often than not in situations like this, it would be getting ready to move up, and so it would look for a big, there isn't anything here, but it would look for a big push like this to the upside. And as soon as it broke that, then the traders would become more bullish, and then the weighting would shift and become bullish. So it's unfolding in real time. So we just have to understand that in real time, especially day traders are going to be looking for markets like I am, like we are right now, where the market is showing intent. Where does it want to go? And the ones that are showing intent so far are Euro GBP, which looks like it wants to go up. It's showing that at bottom of a range. It's generally heading higher. So there's slight overall in this range, because of this, there's probably more buyers than sellers. The other one being, say, Euro Aussie, because overall it looks nice and bullish and it's continuing to push higher highs. It's got this level to break through, but if it breaks through that, it's bullish. So it's showing that intent. Pound CAD is a mess, and it looks like it wants to come back down here. Probably will, but of all the charts I could trade, this one looks the worst. Hopefully that makes sense. Okay, Aussie yen slowing down. We said Aussie Swissy. Aussie Swissy also actually looks like it wants to go down, but not trending in a very clean fashion. So I'm going to pass on this one. Aussie CAD. Aussie CAD. So why Aussie CAD? So this could be something. Excuse me, there's quite a few different levels here. There's quite a few. You can see there's a bit of a level up here when you come up here because of those connections. And then you can see down here there's possibly something. Let's have a look on the daily. Yeah, look at that. Very messy. But it now looks as though consolidation now looks like it's committing. So you can see that strong bearish candle and now push and a close below that. So that looks okay. And overall there was a bit of a level here. So the best trades are going to be ones where the market is just starting a push. It's just starting a push. And so you can see here what it did was there was a level of support resistance. It actually broke through and it's been trying to get back over the line here, and now it's committing and carrying on down. So it's in the early stages of a push to the downside. So if we go back to the 1 hour, now you can see I can actually update this a little bit more accurately. There we go. We can see it actually pushed through, came back, and is continuing down. So that's interesting to me. So if we go down to the 15 minutes, we now see a lot more moves to the downside. So your moving averages, for example, might be coming along here. So your moving averages would be running along there. And price could be looking to come back. Let's do this quickly. Price could then be looking to come back up to this and then carry on down. So that's not a bad idea, and in fact even better is if it would come back into that little area of resistance would be fantastic. That's a possibility. Aussie CAD. Interesting, because look at the Aussie dollar here. Aussie. Just interesting. Cool. Next. Kiwi yen. Okay. 4 hour. Okay, that's just a mess. So for today, it's a pass. Hard pass. This would have been great. If we have something like this, if we have a 4 hour candle that is pushing like that, we're set. We don't have that now. So if you arrive late, we have 3 4-hour candles within which to take our trades today. So we want the market already moving or very close to moving, and therefore we want something where the candles are clearly going. When the candles are all sitting in a small tight range like this, then this drops to the bottom of our list. So if you think about it, you would have what you could call sort of A class, B class, and C class trading opportunities. Okay, A class equals ideal, B class equals okay, but not first choice, basically. C class equals avoid. And so therefore means pass. And this is a pass for today, I would say. QB. Okay, bit of a move. Now it's starting to move. So you can see there was a consolidation here. It's actually now starting to move. And this is interesting. So I have had scrapped trend lines from my trading for years, like probably 7-8 years. I have not used trend lines and been very happy without it. But I've recently rediscovered, in my mind, the best way to use trend lines, which is not as a support resistance level to buy or sell off, but as a line in the sand, which could clue me in as to when the momentum is shifting from bullish to bearish. So let me give you an example here. A downtrend, okay, is made up of lower highs and lower lows. Now, the pullbacks, the retracements, that's where we want to get in. And in a downtrend, they'll be going up. So what that means is this is largely going down. We can see it's largely going down. What we actually have here is, sorry, I did that. I'm not awake yet. What we have here is largely an uptrend. A short-term uptrend, a pullback before potentially continuing down. So why does a trend line matter here? Well, a trend line matters here because if I just generally put this here, like this, for example, generally like below the lows, I'm not worried about where price is now. I want to kind of like, let's connect this low with this low. When we start to breach it, that could now be, and considering how generous I am with this line, it's not like I'm trying to be precise. I'm generally saying that if that is my line in the sand, if price is starting to breach it or breaches a bit further, then I think it's potentially safe to assume that that downtrend pullback is starting to shift to the downside. So in a downtrend, every pullback, and this is what we would call a micro trend. This is a mini uptrend within a generally larger declining move to the downside. In a downtrend, every pullback is a potential entry opportunity, like a bull flag or a bear flag. And those are fancy names for just what we would see. So I wanted to show you that I use trend lines to just draw a line underneath it so that if price starts to breach it, then I can go, okay, I think that momentum is now starting to shift. And then I can go down and look for an entry on the lower time frames. I'm going to do this and then add the arrow in as a tool and then just save that template. And then I'm going to add in arrow. Excuse me. Okay, so there could be something there. Again, this would then be B class. So I would put this as B class down here. And that would be Kiwi, was that Kiwi CAD? And CAD. Oh, and there we go. Aussie CAD, Kiwi CAD. Mess, pass. We're stuck within this range and this range. CAD yen. Okay, again, to me, this is another yen chart that is putting on the brakes. Big move down, pulls back, consolidates, tries to go down, gets pushed almost all the way back up here again, tries to go down, is pushed almost all the way up, tries to go, is pushed up immediately. Now the candle's getting bigger. That's a big, strong buying candle, big, strong buying candle. And the other thing, by the way, let me explain is I've taken the colors away. I've taken the colors away because as you progress, as you get more and more comfortable with just price action, what you really start to look at, you do want to know it's a buyer's candle or a seller's candle, absolutely. But you also start to look at the wicks and the highs and lows. You start to be able to see the shift in momentum, like largely. It's almost like when in the Matrix, when Neo starts to see the numbers at the end. It's a little bit more like that. You start to see there are shapes, but you start to feel the motion starting to shift within the market. And this is what I'm seeing. I'm seeing it's different from here. This is now starting to slow down and there are more bullish candles coming in. And I can see that by the rejections that are coming in. And obviously just generally it's less dark. My brain is going, this is heavily dark because there's lots of selling candles, but this is a bit lighter because there's only 2 seller candles here and about 6 or 7 light candles. So I think my brain is unconsciously just going, okay, there's more of one than the other. But anyway, blah, blah, blah. This is now starting to produce higher lows and the candle's starting to look more bullish. When would I think it's safe to get in? So let's use the trend line idea again. This is kind of cool, I think. See, we've got the lower highs going down. You've got lower highs here, but you've also got lower highs here. So I'm just going to draw a line like this, roughly like that. It just goes in line with those. It's fair to say that once we break above that, even though we're not above those highs, for sure, if we can break above those highs, we're definitely bullish. So there's degrees where you're in the early part of a shift where it's early days, small root, whereas a small roots movement where it looks like it wants to get higher. And I would say here you're starting to produce high lows, high highs, more bullish candles. Once you start to break through that, you could argue that as long as we stay below this, it's still weak. If we start to breach above it, we're starting to look more bullish. And then I would say once you break above that, you're almost certainly, like, that's definitely it. So you get different traders have different degrees of confidence about where they would start to become buyers. But I'm just showing you those different degrees. A strong uptrend, more bullish candles showing up here would be a good sign. But if it couldn't break above that, if it couldn't break that angle, then we're not there yet. Once it breaks and closes above it, I would say we're probably going to break through that as well, because that downtrend has definitely gone away. I'm almost done, probably 5 more minutes. Okay. Cool, so hopefully that makes sense. So there might be moves to the upside on the yen crosses next week. CAD Swissy. Again, CAD Swissy. Okay, CAD pairs have got something going on. So you can see here, if you just kind of put that there, you can see putting on the brakes, lots of rejections. It's tired of going down. This is probably going to start heading up later in the week. Let's have a look at gold. Gold is still looking weak. Gold is still in a downtrend. Lower highs. Look at this series of lower highs. It's broken through major levels. Go to the daily. It's at a major level here. It is. I agree. There's a big level here. But it's trying to push lower. So that could be some opportunities to the downside. I'm a little bit cautious because I want to hear how the news impacts that, because it's tied directly to the dollar. Then we have silver. Also looks very much like it wants to head lower. So it is bearish. It looks like it wants to continue. So I would say shorting them, but it might have to be next week. Let's look at oil. So let's look at UK oil. UK oil has had a big, strong recovery off a rejection here and another rejection. So this is usually collectively is an attempt to go down, push back up, another attempt, and immediately a push back up. So it's probably now finding a level of support. So there might be some buying opportunities on that. Let's put it like that. So there could be. Certainly once we break above that, it becomes more bullish as well. And again, if we use that example that I was telling you about, if I draw a line that goes like this, or let's go down to the 1 hour so you can see that. Imagine there. If you just draw the most recent, what you're saying is the momentum has shifted. That's all. So if you do this, for example, through those, we've started to break upwards. So the momentum is now sideways, pending bullish is the way that I would describe it. Okay, so oil looking good for that. Oil, US oil as well, starting to do that. Breaks above that, definitely. So once we start to shift above this level, we're going to start looking more and more bullish. So there could be some oil buys and some precious metals could be looking to sell. Oils could be looking to climb. Let's see if any of that changes after the news, but that's how it's looking. Let's move on to the indices. Indices, I think, are looking bullish. They're actually pressuring a level up here because they want to go up. If we go to the daily, you can see that there's now a strong move down, strong bullish candle pushing up, and a bullish candle here. It wants to go up, but don't forget, don't make that mistake. It is in a longer term downtrend. That weekly might be producing a bullish candle, but like this before it goes up. But very, very cautious because that overall trend on the daily is still down. Overall trend is still down. I would exercise some caution on that, but it's also trying to do a bit of a shift to the upside. Again, I would probably stay till after that. So looking potentially bullish, the S&P 500, also looking bullish, high lows, high highs above this level, maybe more bullish. So there might be some trading opportunities on this afternoon after NFP. If the market is quite hungry, there'll be some fast moving markers to the upside. In this case, I would go to the 5 minutes because the market can move so fast that I'd be looking for those moves. Nasdaq, also a little bit of a messy head and shoulders, if you want to call it that, a break above these levels. Almost certainly looking to get above that, but it has to get over it. I'm not going to buy now. I needed to break above here to show me for sure and close, by the way, 1 hour at least. So that means the earliest I'm going to do this is probably 2 o'clock or 3 o'clock this afternoon, start looking for buys because I wanted to close after the news. FTSE 100 was looking really bullish. So this is interesting to me. If you go to the daily, it was actually looking quite strong. The US markets have been falling. The UK markets have been pushing up, really bullish. While the US has been falling. So it looks bullish. And here it's got a series of high lows testing this level. It wants to break out. And yet it's failing right now. So I would consider this a bit of a clue that this is not necessarily safe to trade just yet. We're going to have to see. There's your level. That's your level. So you've had a break, a close, and an attempt to go high and a pushback. It's got 46 minutes to go. So I'd have to see if it closes down here or closes up there. But if it closes up there, there could be something there. So it could be something on this as well. So look at that 15 minutes. There could be something. Heavy selling though, that should not be happening. If the market was bullish, this would not be happening. It can't happen if you've got a bullish market. So that level is significant and the market might just stay there until after the news. So they could, if all the markets are sitting at these edges, they could really be waiting for the news to just nudge it either way. And that's it, guys and girls, that is it. So just to recap, the ones that I like the most that potentially offer something here would be buys on a couple of the euro pairs, euro Aussie, pound Aussie. That's really the weaker Australian dollar. Aussie CAD makes sense. It's a weaker Australian dollar. The CAD is looking relatively mixed in its results, and Kiwi CAD. So those two together for sells, those two for buys, and that potentially is a buy. And that is it. If there aren't any questions, I'm going to wrap this up. But that is what I'll be looking for today. And then what I might do, we'll see, because I don't want to bombard everyone, is have a look and see how the markets, what happens after the markets. And that's really it. So yeah, those are the markets I'll be focusing on. The rest I'm going to probably stay away from for now. And I think that's it. So there don't seem to be any questions at this point in time. If you do, just type them into the comment section and I'll monitor them today. I'll try and respond to them as soon as possible. Okay, I'm gonna end this now, and then I will we'll catch up on that. Thanks, guys.